Michael Saylor, CEO of Microstrategy and Bitcoin evangelist, famously advised investors to sell everything you own and go all into Bitcoin today. He made that call when the price was $68,678. Since then, the price has fallen almost 50%, and to be frank, anybody who heeded this call has had a disaster. Yesterday, we took a look at one scenario. That price dips below the MicroStrategy break-even price and heads into margin call territory. After all, the perceived wisdom of modern markets is not to bet against something that millennials find entertaining. And while Saylor is a crypto fanatic and that aligns with many young investors, he is seen as being a bit cringy and, judging by the commentary on social media, a fair target for a banter cancel, which is what a margin call would be. So let's work out the parameters of this scenario. Saylor is the CEO and majority shareholder of Microstrategy, an enterprise software company. And Saylor has put over $1 billion of MicroStrategy funds into Bitcoin and even borrowed $2 billion to buy more. To call MicroStrategy overexposed is an understatement, and Saylor has a bit of a controversial past. After founding the firm in 1989, Saylor was part of an alleged accounting scheme which made a loss-making company look profitable. And in 2000, Saylor and two other executives paid an $11 million SEC settlement, with Saylor paying the chunk of it. The charges were settled with no one admitting any wrongdoing, and Saylor hung on to his role at MicroStrategy. The company's revenue has declined every year since 2014, but until recently, MicroStrategy's Bitcoin adventure had effectively converted the struggling company into a proxy investment vehicle for Bitcoin. Currently, the company has amassed more than 129,000 Bitcoins with a value of over $5 billion. It is believed that the average buy price for MicroStrategy is $30,700, and in recent days, the company's CFO said that the firm faces a margin call on some of its holdings if the price falls to $21,000. However, while it's true that many of us may just want to see the world burn, MicroStrategy claimed to have contingency plans in place. They could avoid being forced to sell its Bitcoin by adding more collateral to its loan. So while a blowout Bitcoin sell-off on a MicroStrategy margin call may be avoided, if the price does get down to that region, sellers might shift focus to the company itself. The company is trading at a market valuation of around $4 billion, a discount to its underlying crypto holdings. This suggests that investors may be somewhat uneasy with its billions of debt, slowly declining software business, and exposure to perhaps the most volatile asset of all time.